world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Sankaet Pathak is the founder and CEO of Synapse, a platform banking provider. Fresh off a Series B led by Andreessen Horowitz, Synapse is operating at the leading edge of the potentially massive platform banking trend. In this conversation, Sankaet and I discuss the issues with existing sponsor banking infrastructure, examples of new propositions that can be built with platforms like Synapse, and the implications of big tech and non-banks surfacing banking and financial services products within their offerings. In addition to the insights we deliver through our podcast and newsletter, Rebank offers advisory services to fintechs, banks, and corporates. Drawing on our experience starting, running, and advising fintech businesses, and our vast network of the most impactful fintech entrepreneurs, investors, and innovators around the world, we help companies make sense of fintech, work through specific questions, and optimize proposition and strategy. For more information about our services, please visit bankingthefuture.com. Thank you very much for joining us today. Please welcome Sankaet Pathak. Sankaet, welcome to Rebank.
Thanks for having me.
It's great to connect with you. I've been looking forward to this conversation. Synapse has been on my radar screen for some months now. I can't remember how. Actually, I'm sure I first came across you talking to VCs in the San Francisco area about trends that were most interesting to them, and obviously in that context, companies that were executing on and around those trends. You are certainly no stranger to the Bay Area VC community, fresh off a $33 million, is it? Series B?
Yeah, a little over 33.
A little over 33, led by Andreessen.
Yeah.
Right?
Yeah.
Quickly for context, can you just talk high level about what Synapse is?
Sure. Synapse is a financial technology platform company, and what that really means is our goal is to make it really easy for anyone to build and scale financial products. That traditionally takes about 18 to 24 months for people to build. With Synapse, you do in like a week to a month, something like that. That's the goal. And why we think that's extremely important is increasingly more and more internet companies want to act like banks and offer financial products to their customers. And if that's going to happen more, it only makes sense that you upgrade the platform where all these things happen as well. So that's where Synapse is coming in. We're building out the entire platform, a one-stop shop for any technology company that wants to build and scale financial products to come and just quickly build and launch those products. Yeah.
So you guys are extremely well positioned, it sounds like, and this is such an important emerging trend. And I think not only, as we were saying right before we started recording, are you well positioned to benefit from the continued, this kind of continued directional move, but you're actually the ones enabling this shift in many ways. Like there are existing sponsor banks out there, some which I guess have varying degrees of technology sophistication. It's not in and of itself per se a brand new concept. It's just that a company that's specifically designed to deliver to the needs of the companies that are starting to take this seriously now is potentially extremely well positioned for future growth.
Yeah, I think people have tried to do this for a while. How we're approaching this problem is a little different. How this has happened so far is you have a sponsor bank like Bancorp Bank that any company reaches out to and says, I want to build a checking account. I want you to be my partner bank. Tell me how to do it. They do their diligence on the company and they green light the project, and then they give about 10 to 12 approved vendors to the company to integrate with for different functions, KYC, processing, ledgering, what have you. Because you have about 5-10 companies surrounding you and a bank, they all have their own business models, their own diligence processes. It takes a long time for you to be able to build that product what we're saying and what we observed was that shouldn't happen anymore. A lot of these products are essentially turnkey at the infrastructure level. A deposit account is pretty much a deposit account. A debit card is pretty much a debit card. A credit card is pretty much a credit card. Let's build a one-stop shop so that people don't have to kind of reinvent the wheel again and again. Very analogous to how people used to build and scale servers before cloud existed. Everyone was kind of just meeting with all the suppliers, building these things on-prem, and really piecemealing stuff together. And if there were to exist more internet companies, which they do today, that model just would not have worked. And the same is true for financial services. If more and more people are going to offer more and more financial products to their customers, this model doesn't work where they all have to rebuild this whole stack or piecemeal this whole stack together. We're the only one who's probably trying this approach that I'm actually aware of. Everyone else still kind of picks apart one or two pieces of the stack and focuses on that, while others can do their thing. So we're trying to just do it differently.
Yeah. Well, so many companies kind of talk about being the AWS of X, but I think it's actually a very fair analogy, Synapse to AWS. Because in my understanding, and help me fill in the gaps, but you partner with existing licensed chartered banks in the background. You enable them to achieve greater geographic distribution of their products, help them add assets, add liabilities. And you do that by building a technology connectivity layer that sits atop of that and then delivers account opening, card issuing, lending as an API out to fintechs, non-banks, big tech, anyone who wants to potentially leverage those capabilities.
Totally. So we definitely play from a technological perspective. We do play that middleware role. Other things that I didn't appreciate, and now I do, another big piece when you execute the business the way we have, you also end up building the layers around servicing and governance, which are extremely expensive for people to maintain. But if a technology company also is worried about servicing and governance versus having that sit in a different stack, we can bring a lot of process efficiency because we can centralize a lot of our controls. For instance, identity verification, transaction monitoring, all of that can just be done at Synapse's level, so you don't have to go and audit every single fintech company for those things. And that brings extreme efficiency on the governance side. Same with support. We understand our tech well. It's not piecemeal together from 10 different vendors. To be able to chase an issue down, it's much more easy to just reach out to Synapse and let Synapse figure it out versus you have to go and run around and figure out exactly where the problem was. So I didn't appreciate those things initially, but I think that also comes with this infrastructure type approach that we're taking.
Well, the governance and compliance piece sounds pretty dull on the face of it, but it's such an important differentiator. Having myself run supplier selection processes, procurement processes for potential bank type partners, fintech partners. At the end of the day, if you're talking about the sponsor banking model, in so many cases, the compliance, governance, risk management, operational requirements that are effectively passed through from the sponsor bank onto you, the fintech or the non-bank or the tech company that wants to run banking products, are just so onerous that you end up paying a significant amount for the access to the banking license and banking products. But the rigidity of what you're able to do is so crippling that you're almost better off just seeking your own authorizations and raising your own capital at that point.
Totally. It doesn't scale.
Right. Yeah. So the idea of actually building that into the service offering, and someone calls up Synapse and says, do I need a chief risk officer? Do I need a head of compliance? Do I need to rewrite my articles of association to account for governance requirements that X underlying bank is going to require? And the answer to most of those questions, as far as I understand it, is generally no.
Yeah,
we take care of that.
No. Yeah, unless you also have to follow FINRA governance and compliance. Like if you're doing an investment product, a private placement product, those have more complicated needs. But if you're doing a straight up banking product, then no, the answer is no. We are making sure we do suspicious activity monitoring. We're making sure that all the compliance processes are being kind of run correctly. We're keeping an eye on your marketing guidelines and how you can market products. So in most cases, the answer is no, you don't need that. And I didn't realize that until last year, how big benefit that ended up being for people.
What partner banks do you guys work with, and how have you selected those?
Yeah, well, how we selected that is interesting. But we work with Evolve and First Tennessee and Independent. All three are based in Memphis. How we selected them was I went to school in Memphis, so I got to know the community over there more. And these people just knew us for a while. When I was starting the company, I kind of knew all of those banks and slowly ended up partnering with all of them. We deliberately decided not to do Rebank and Bancorp Bank because they already had their processes built for these things that we just didn't see eye to eye on. So that didn't make sense. So I ended up kind of like going with friends that I just knew that were running banks and had gotten to know them and asked them for help, and they did. So, yeah.
Do you expect to expand that partner network over time, or are you sufficiently served as it is?
We're fairly sufficiently served. Now, here's where we would like to still expand the partner network if opportunities present itself. Over time, I've realized that certain banks are better at offering some products. So if there's a bank that is a very specialized thing that they do extremely well, and for some reason to us it seems like that specialized product needs to exist in the Synapse ecosystem, we will seek them out and partner with them. Like, we'll do some credit stuff, and that essentially is pretty much like the idea is over there. Some banks are going to be better positioned to be able to provide credit products versus not, and we're going to pick those banks to be able to do those products. But from a general product suite perspective that we have today, the network is sufficient, but we might still expand more if we find a product that a certain bank is better positioned to do.
I think that as we go through this conversation, I'll kind of dip in and out of Synapse-specific questions and kind of pull it back from time to time and think about broader industry trends and developments. So, I mean, if you put yourself on the side of the banks, so your partner banks and banks more broadly, in your view, is this move toward leveraging the infrastructure to service as part of a broader utility layer that's supporting fintechs and non-banks and brands on the front end? Is this something that, in your view, all banks with say sub 25 billion in assets or 50 billion in assets who operate in a local community, don't have geographic distribution, like should just do as a no-brainer? Is this something all banks should do, or is it a specialist skill set, do you think?
I don't think all banks should do it. I think the very first question the banks need to ask themselves, and they have to be extremely honest with themselves about this, how much do they care about having a direct relationship with the end user? And if the answer is not much, then that's the first qualification. Then the second piece ends up being, are you sure you can run this business well in terms of you can have the right oversight and governance functions built out? Make sure that you understand the lines of businesses you're going to go into extremely well, and what risks you have associated with that extremely well. For instance, for payment processing, just understanding the 60-day float and return window well, authorization risk, Reg E risk, and how to kind of like propagate those down, how to build your financial models where you underwrite customers correctly for them, all the way to lending products where either you're doing a warehouse line or you're doing an end user white labeled loan. You have to be able to build those models extremely well as well. Not every bank is well suited to do that, but there are banks that are small and some banks that are even over the 20 billion in assets that are well positioned to be able to do some of these products. Like banks like Synchrony Bank probably is well positioned to do this, even though they're over, I believe, the 20 billion asset size. Why the 20 billion thing came about was more so because of the Durbin Amendment, which made it close to non-lucrative for any large bank to do a debit program. But that doesn't mean they cannot do credit programs. That doesn't mean they cannot do savings accounts that are tied to their net interest margin, because they have much better net interest margins than smaller banks. So even large banks can participate in this. But the question really ends up being, one, how much do we care about the relationship with the end user? Second, what business lines do we want to get into that we understand the risks extremely well? And how do we want to monetize that? And by the time they can answer those two questions, then I think then it's an achievable thing. Outside of that, I wouldn't recommend it. So,
wait, when you kind of look out across the market and see the Robinhoods of the world, the Wealthfronts of the world, I suppose VAR is pursuing their own banking charter, but companies like that who are launching high yield savings products as a way of attracting new customers. Do you look at that and think, this is turning of the tide and the whole world's moving in this direction? This is great validation of our business model. Do you look at that and say, wow, that they're kind of taking one small step in a direction which could be so much richer, and why aren't they going further? What's your general thought about that kind of
they will
strategy?
go further. Yeah. I think what's very interesting about these companies, Robinhood, Wealthfront, Acorns, whoever, they're solid consumer brands. But that's what they are. They're not tech companies. They're consumer brands, which is okay. Like, their job is, by and large, build out a customer base that really loves their products and really trusts them. At some point, they're going to hit a cap where their customer acquisition cost is not going to be worth as much effort. And then cross-selling would make a little more sense. And that's the experiment some of these people are running, which is, we have a customer base that loves our product. We've delivered tremendous value to them, or perceived value to them in some cases. Now they trust us. Let's see if they would buy more products from us. And if that experiment succeeds, they will do it again. At some point, that experiment is going to have a higher return on investment than constantly growing customer acquisition cost. I think they'll do both, but I think this is the one that's really going to catalyze some of the revenue generation for them. And we think we're well positioned to help some of these folks, because I'm sure Robinhood, Chime, all these people would do their second incremental product the same way they did the first one, which is they would do the vendor sourcing and they would do this whole procurement cycle. And then they would evaluate their experiment and realize they cannot realistically have procurement cycles running 24 months before they launch a new product. That just cannot happen. They need to be able to cross-sell faster. And when it comes down to that, cross-selling faster and ease of adding new features, then we're probably better positioned than anyone else. So that's going to happen at some point.
You, as we referenced before, recently raised a big Series B round. What was the $100 billion vision that you communicated to venture capitalists during that fundraising? What's the end game for Synapse, a company like Synapse?
That's a good question. What we're chasing is, we think there needs to be a super easy to use global financial infrastructure platform that makes it really easy for people to permute through and build new products, scale them, and service them. And we want to be that company. So that's essentially what we communicated. Think if PayPal was white labeled with APIs and got to enjoy the infrastructure, all developers got to enjoy, not just, PayPal is not a well-executed business. If PayPal was executed extremely well, they would probably have a banking infrastructure product that anyone can plug into and pretty much unlock all capabilities that the platform's capable of offering. And that's what we're doing here. We're just saying, let's build out kind of this blend between Visa, Citi, and PayPal, and make sure all developers, big or small, can access this network. And if that happens, then more products and services would be built that would have some flavor of financial services in there. Just like as soon as cloud existed, as soon as Squarespace existed and Shopify existed, the amount of merchants, the amount of internet activity, the amount of websites grew exponentially. We've lost count at this point. And that's more so the vision. That's what we want to really enable happen in financial services broadly.
Yeah, I guess the other side of that coin would be, so you've described what the infrastructure looks like to support that future world. From a consumer or a business customer standpoint, what are some of the the ways in which you expect the value chain or the experience model to evolve? Are there kind of obvious next steps or kind of down the road type evolutions that you expect to come to the way that people experience financial services?
Yeah, I think there are about 4 things that are going to happen, like pretty much in parallel from what I can tell. One, you're going to have some companies that are at scale in terms of have really good distribution figured out, has a massive customer base, have never done financial services products before, but they think this would be a good value for their customers, a good increase in their revenue, and they would roll these out because they have distribution figured out. Great. Apple is an example of that. There would be another set of customers that would primarily say we're financial services firms, Robinhood, Betterment, and they would be able to get a good portion of customers that really trust them and really like the brand and have a significant sense of brand loyalty, and they will cross-sell and roll out more products to them. Very similar to like an apparel brand. Like people really take a lot of pride in whatever clothes they wear in some cases, and it's very likely if someone wears Nike, they're going to buy Nike again and again when Nike has other products or clothes rolled out. Then I think there's going to be a third bucket, which is just fundamental evolution and innovation on financial products. Like Earn, Dave, a bunch of these people have really fulfilled a market need that was emerging, but not a lot of people noticed or realized how to solve that problem. So I think some people are going to really prioritize financial innovation to differentiate themselves. And I think the fourth one that's going to happen is small pockets, small use cases that were not financially feasible to be serviced before would get serviced. Like a small community, like maybe an Amish bank, like all these different things that usually people don't build because you have to raise venture capital to do financial services. But if we can get cost of building and deploying financial products to a point where you don't need venture capital to do it, and you can still build a small business, then people would also facilitate small use cases. We've seen something like this happen with the App Store, Apple App Store, where 1 or 2 or 3 people, a small developer shop builds out a product for a very niche use case. But that's sufficient because that pays the bills and builds a small business for them that they can maintain. And I think all 4 of that's going to happen.
I've heard you say that I think you have something to the order of 150 customers or something at the moment, active clients.
Yeah.
I'm sure the pipeline is much bigger than that. And I'm sure that those customers are doing all sorts of different things, from the more mundane to the more innovative. If you woke up tomorrow and weren't running Synapse anymore, Synapse was alive and well and functioning great, and you were starting a new consumer fintech company, and you were going to leverage Synapse to do what you're going to do, what would you think about in terms of your angle, your strategy, that products you potentially look to roll out? Like you must have thought about what some of the more compelling ways in which people can leverage Synapse could be.
I have, and it changes over time because customers come in and build great products, and I'm like, great, I think that problem's going to be solved. I used to say this for business banking. I used to be like, well, I want to do business banking, but I think Mercury is like doing a great job. I think they'll succeed. There are some customers that are going to do like a really good credit card, so I think they will succeed. The piece that I think people are still not getting around to is doing a consumer-facing SaaS banking company. What I would much rather do is I would much rather build out a consumer-facing financial product that at its very core, it's incentivized by providing great products to my customers without requiring them to spend more money. Today, financial services by and large are like use a credit card, swipe your debit card more, and that helps you build your revenue because you get interchange revenue and a bunch of these things. I would much rather build a freemium type banking model where basic financial products are by and large free and the interchange revenue supports that model, and then add some really premium products, extremely high interest savings accounts, financial advice, credit cards that compete with Chase Sapphire, like all these different things, and make that a SaaS fee model. Pretty much the idea being the customer is not going to sign up for a product unless it really delivers value to them that they need. And I'm going to get compensated for that in a monthly fee.
Yeah.
So I'd probably build something like that out. No advertising, no coupons like Bank of America it's crazy. I don't know what they've done. None of those things. Don't want to like do anonymized like ad pushes, any of that stuff. Straightforward SaaS fee-based banking, super clean, premium product focus, and then people pay for what they use.
Compelling. I'm almost disappointed that you're going to continue to run Synapse and not go start that. Maybe someone smart who's listening will call you up and talk about how you can partner to do that.
I think this is going to happen. I think it's just going to happen, and we're kind of making some changes to our business model to like kind of enable that as well, where people's incentive kind of goes in that direction. I said in like our Series A super secret plan, which was make banking SaaS based. So that's like our secret agenda. It's been for a while, so we'll try to make that.
What do you mean SaaS based from a consumer standpoint, i.e. a subscription?
Just a subscription fee. Yeah, a software as a service type fee versus kind of being more incentivized on interchange revenue. Yeah.
Are you public with any of the clients you're working with?
Yeah.
Anyone you could tell us about?
Yeah, that's like picking your favorite type stuff. But I'll tell you the ones that are top of mind for me right now. I really, really like what the team at Dave's doing. I think they're building an extremely compelling product. I really resonate with their mission, so I really like what they're doing. We have a new customer that's going to launch called Zorro Card. They're like a new company, so they're still in stealth, but really resonate with their mission as well. Really like Propel, really like what Propel's doing. I think what Ahmad's doing with Mercury, business banking for startups, is extremely compelling. I think Empower's building an extremely strong neobanking product. So I'm a customer. I use that every day. So I really like what they're doing. Really like what Patrick at Point's building. Patrick is probably like one of the best visual product people that I've like. He knows how to build a consumer facing product better than anyone that I'm aware of. So I'm extremely excited about what he's building. Yeah. But they're like 150. I'm like mostly almost thankful to all of my customers. I think almost everyone's doing like something or the other extremely cool.
I was told by an extremely smart venture capitalist recently that you, according to her, might be the greatest product mind in fintech.
Oh gosh.
Do you have any sense about why she may have said that? How do you think about product? How do you work on product?
Yeah, I think there's a difference in how Synapse kind of thinks about products and how other people do. And I think that's probably evident in this conversation, which is like we constantly focus on what would be the most compelling products for the end customers. And the idea is if we can really enable that, like help deliver something extremely exciting, that would be super exciting, not for just us to use, but also for other customers to use in the market, then our customers would want to build something like that or would already be building something like that. And that is what really excites us and kind of like motivates us to kind of like solve this problem. And that's probably what they're referring to, because like I think the approach here is a little different than saying my customer has this emerging use case and we don't want to understand why they have it, but they have it, so we're going to deliver to it. Is a little different to being like, oh, I'm finding this interesting pattern that a customer is observing. Why are they observing this? How does this fit into like a super compelling end customer product? And then let's build out the Lego pieces to be able to make that happen. Yeah. I think probably that's the difference.
It sounded like, this is kind of referencing conversation you and I were having right before we started recording, that so if I think very kind of simplistically about how to build a backend infrastructure company, then it's okay. What's the problem that I'm trying to solve for my enterprise customer? Okay, build some software that does that. In this case, it's they'd like to be able to open a checking account or offer a debit card cheaply, more easily, and with better tech than they can currently do. So I'll just build Bancorp, but in technology.
Yes.
And it sounds like you've gone kind of you go much further than that in thinking of product design, development, delivery, and applying in many ways a lot of the kind of best practice consumer product development frameworks to building enterprise software.
Yes. Yeah, I think that's a good observation. And a good example of where these things have succeeded is if you looked at Simple, one of the big barriers to Simple's growth, and maybe the founders would disagree, but was the product market fit was just like completely at odds. People who wanted to use Simple were mostly underbanked people, immigrants, because Simple had a debit card and a savings account. That's what they needed. People who were affluent, had a credit history built, wanted a credit card. So they really didn't want to use Simple. Because of the constraints they had with Bancorp, they couldn't onboard immigrants. So they were literally couldn't even service a significant portion of their customer base. And I'm fairly certain because the credit checks for SSNs were credit history based. SSN checks were credit history based. They couldn't even onboard underbanked people. So they were pretty much building this product for a customer base that didn't want to use it, and the customers that really wanted to use it couldn't access it. And we tried to solve that problem. We said, how can we make it so when our customers onboard these individuals as well, the product works extremely well, and delivered on that. When we looked at why Seed didn't succeed for a business banking product, about the same problem. Seed's initial customer base was they were literally banking for startups. They were a Y Combinator company. But the issue was all of their early adopters, most of them were immigrant founders. And they couldn't onboard them. Mercury can. Mercury is succeeding. But because we were thinking about solving those problems is why we were deliberate in the approach we took. Otherwise, we would have been a little more superficial in problem solving and said, we need to do a business checking account and we need to do a consumer checking account. Versus being like, no, these are the end customers. This is what they want. That is what we're going to deliver to. 2 more features that we're about to launch. One is integration with All Points ATM, and one integration with Green Dot's deposit taking network. Make Synapse the largest network in the US for ATM access. And the impetus of the whole thing was we started to think about why is it that we're seeing lower usage on our MoneyPass ATM network in communities that we would expect to have high usage. And it turns out here's why. When people are walking back home after doing their job, they're taking a bus, it turns out most of the MoneyPass ATMs are either in a bar or outside on the street. You don't feel safe depositing cash that way. All Points ATMs, on the other hand, are in a grocery store. So we wanted ATM access for people who were a little lower on this socioeconomic bracket, but MoneyPass was not helping. However, the affluent customers were going to US Bank's ATM, which is again the MoneyPass banking network, and we're depositing and withdrawing cash just fine. And we said, okay, that's the problem we really need to solve. So we added All Point very deliberately, and then we added Green Dot very deliberately. But most infrastructure companies don't do that analysis.
Well, it's amazing insight, and it's so fascinating to think that. So I'm familiar with Synapse's founding story, and I think that simple experience that you're describing, the immigrant not being able to open the bank account, was your own experience,
yeah.
right? Like you, as having moved from India for university in the U.S., weren't able to open the account.
No.
And here you are, X years later, solving that problem for the modern day Simple and the modern day Seed.
Yeah, and I'm
not to mention hundreds of millions of Americans.
Totally, and I am only using our customers' products, so I'm not on any large bank anymore. All the cards in my pocket are my customers, and we'll do a credit card, and then for the first time I'll get a credit card as well. So,
wow. As an immigrant to Europe, I have had very similar problems. It's kind of mind-boggling. Speaking of Europe, I think you guys have a geographic expansion on your roadmap to some degree. What's the thinking there?
Yeah, first year expanding, so want to do in countries that are kind of homogeneous in terms of from a regulatory perspective and the customer set perspective, because our existing customers wanted to go there. So we picked Europe and Canada. So we'll launch our deposit and payment products in both of those regions by end of this year in like our first beta. and slowly add people in those product and offerings. And then hopefully by end of next year, do the same thing, do like the investment product and the credit product. And then next year want to embark on something a little more ambitious. So we'll probably want to do Latin America and Asia as a primary focus. If we cannot do more, at least we will do those. I'm hoping we can do more. If we can do more, then we'll probably do like Australia as well. But the idea being, kind of really want to build this network that doesn't only work extremely well in countries that we're kind of like currently existent in, but also want to kind of like make this work extremely well for really like emerging economies on the internet, and not having banking be totally internet friendly would make no sense. Like there are massive companies like Uber that are scaling in Latin America and in the Middle East, and their drivers just not having access to a financial rail would just be a shame. So just making sure we can execute on those things is going to be very compelling as well.
I'm sure in the context of international expansion that you've looked at the likes of Solaris Bank and Rails Bank and Clearbank in the UK. What's your sense of where some of those guys have been successful and maybe where they've been less successful?
I think they've done a great job. I think, and this goes back to how we want to approach the market. I think Clearbank is great if you want to do these like bulk settlement type use cases, which means they're all of these people that you've mentioned, they're hyper optimized for helping an existing EMI launch payment processing or fulfillment type products. We want to go to the market and say, we want internet companies to be able to offer financial products, which means don't worry about a processor, don't worry about KYC, don't worry about governance, don't worry about an EMI license, don't worry about all of these things. We'll give all of that to you in a package. For you, it's going to be an API call with like as quick of an implementation time as you see in the US. And hey, here's the thing, you can not only launch in Europe, but in the US at the same time. That's the change in approach.
That is a compelling proposition.
Yeah.
How do you guys price your services?
Big fan of service fees, SaaS fees. So we charge SaaS monthly fees to our customers. And then if they use our origination products like ACH and things like that, there are transaction fees in there as well, because we have to pay transaction fees. Then on top of that, we are extremely deliberate about how to make our platform a net revenue generator for our customers. So we also do interchange revenue splits with them, give them a portion of the interest revenue, things like that, so that we want all these people to be able to make money, which was my fourth use case that I was talking about. I want a small business to be able to launch a financial product, and we can only do that if they can make money on top of this. So we also have like revenue generation opportunities for our customers.
Wait, working backwards a little bit. So if you just announced the Series B, when did you start working on Synapse in its current form?
In its current form, about 2.5 years ago.
Okay.
Yeah.
So you raised some money, kind of pre-seed, seed, Series A, no doubt, but it sounds like you've built a massively functional system, and you're servicing 150 clients. It sounds like you achieved a lot on a relatively low capital impact.
Yeah, no, I think the team's done a good job. Like, I think everyone has worked extremely hard and diligently to get to here, and they still continue to do so.
Do you think there's anything specific that enabled you to do that, to deliver so efficiently?
Yeah. When I moved to the Valley, no one was wanting to invest in this idea. So the options we had was either we figure out how to make money or we die, and couldn't have us dying. I had my friends move all the way here. I couldn't have them just like have to look for another job in 6 months. Like, that just wasn't something I was willing to live with. So we figured out how to make money. Like, that's essentially the thing. We just figured out how to make money, and we didn't really get too bogged down into like other ceremonies, which was distracting ourselves too much by going to like meetups, and I almost did like no talking or speaking type stuff. We pretty much stayed focused on product, sold value to our, like delivered value to our customers, got paid for it.
Well, excellent. I genuinely feel like you guys are providing a massive service to the broader economic community, right? Not just the banking industry. Actually, you're putting the pressure on traditional banks and FS companies.
I hope, yeah.
All the best.
Thank you. Really appreciate that.
Sankaet, thank you very much for joining us today.
Thanks, Will.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.